You're watching Virginia This Morning.
We enjoy passing along helpful tips that can help you manage your financial portfolio. Today's lesson deals with behavioral finance and the psychology about certain decisions we make about money. Oh, this is going to be good.
It's going to be good. Our good friend of the show, Bryan's back with us today. JB, it's great to see you.
It's good to be here while we do what we do.
Yeah.
Your story, you've been talking all morning about this purse purchase.
Yeah, well, in a nutshell, I bought one that I have no business buying.
And it broke the purse, didn't it?
What?
It broke your purse, didn't it?
No.
There's no money left.
No.
And it's currently sitting in my house with the tag still on it because I'm kind of pending. I'm having heartburn, but there's a larger picture here.
Well, with you, a big part of behavioral finance is a herding effect that we find out about things and we all go there to try to participate. Even if you look at it as investments, you might remember when technology was really hot and everyone started wanting to participate in technology, but you're not a herder. I mean, and that's because I know you. Mm-hmm. You're one to do something opposite of the crowd. So why you made that purse purchase, we would have to really speak together privately about it, go in deeper detail.
The show's over at 10, honey.
Yeah, right.
We don't have time for all of that.
She just has money. Look, that's what you call extra
Nothing
money.
better to do, right?
Exactly.
That's right.
Extra money.
I was making it rain this week. Okay.
Let's talk about investors here, because you've got the classic thing that they say in sports is some people play not to lose, some people play to win.
That's right.
Yeah.
And investors typically play to not lose.
In sports, you're supposed to play to win.
That's right. But we play to not lose.
Okay.
And when it comes down to it, you'll find that most of you, I'm sure, would rather keep what you have than to worry about doubling it. You know, if it were said, well, for example, if I said, here's $50, but if we flip this coin, you have a chance of making 100.
I'm not a gambler.
You take the 50, right?
And
And that is pretty typical. It is typical. Now, Jessica, on the other hand, would probably say, let's go for the 100.
Double my money.
She's atypical. That's funny. It's good to have both of you because, the typical situation would they go for the win. They want to have it now. Even if you're offered, in studies, they've shown where people are offered $100 in a year. And if you wait one day after that year, you get $102. They say, okay, what's one more day, right? But if you say today, I'll give you $100 today, or I'll give you $102 tomorrow. Typically, everybody wants the $100 today, even though it's the same offer. But and that is why when you look at it from behavioral finance perspective, people don't save a lot. When you look at the $100 today or $102 tomorrow, most people are not saving enough because they can only focus on today.
Right now.
That's right. That's right.
You've got something down here about the cockroach theory.
That's when I went to your house. No. But this is a real theory.
Okay.
The cockroach theory says that typically investors will say if there's a problem and it's become public, there's other problems. So when there's a cockroach, and everybody starts looking for, we better get the exterminator. So people will actually just get out of the investment or think that the entire thing is flawed. The entire idea is messed up. I don't want any parts of it because it had that one problem. Like if there's a recall on a major vehicle for a company and they'll think that all of their vehicles are messed up. Yeah. So, and that'll affect their stock price. So investors react that way to the cockroach theory. Okay. And I'm sorry, your house is very clean, I'm sure.
Lovely.
Never been.
In the context of this conversation, these are almost like personality types of investors that you can then identify with, maybe to shape your personal finances. You've talked about the herd instinct, the cockroach theory.
So it's got to be somebody
so
you're
it's like, why
with.
is it important to think? That's right. Yeah. When you are working with someone and when you're making your own financial decisions, you want to make sure that you realize these things. Like you said, why did I buy this purse? I mean, a lot of us want to know, why did I make that decision? Why did people continue to purchase homes when they knew that the real estate market was bubbling and they kept paying more and more and more and more? But that was hurting. So what we have to do is be conscious of what is happening.
She bought the purse because it made her feel good.
That's why she bought the purse. I think a lot of it, I need to add that one in, the cockroach feel good theory.
All right. My grandma used to make great big biscuits, and she called them cat head biscuits, but that was a good thing.
That's
I'm not sure this is a good thing. The dead cat bounce?
Yeah, the dead cat bounce is an investment theory where the stock has fallen and then it bounces back up. And people will run to get it because they go, oh, it's hit its lowest. You know, and they'll start pushing it back up with demand of, oh, we bought it at the bottom. So it brings it back up for a second, but it's still dead. It goes right back down.
Yeah.
So those who participated in that bounce back up end up losing a lot of money because they're just...
They don't have 9 lives.
That dead cat is gone.
They don't bounce
It
very
just
high.
had a nice little bounce. Yes,
right.
indeed.
Tomorrow you got to bring the purse in. That's we got to see it.
Yeah,
And
and,
you gotta cut the
I'll come
tags
back
off.
and we'll
look
continue
at the
to
psychology of the purse.
the cockroach feel good.
How did I
dead
get
cat
in this
approach?
segment? We're talking about the psychology
But
of a
it
purse.
is so real.
Oh,
when we
yeah.
think about I have a client that says, do you think about what you're thinking about? And I think that is so cute because we really need to be conscious of why we're making the financial decisions that we make. And are we just participating in what everyone else is doing, or is this actually what's best for me?
Yeah.
I'm thinking about what I'm thinking about. If you'd like to think about this with this lady, for more great financial tips, you can join JB Bryan every Wednesday at noon for a new money seminar each week.
And then you can help JB celebrate her 20th anniversary, 20 years, on Saturday, June 27th from 11 a.m. to 1 p.m. Both events are free. Registration is required. For more information, you can head to our site at WTVR.com/VTM. Now I have a good excuse to cut the tags off that purse.
And you know what? You did cut tags off and give it to her for her anniversary.
True.
True fact right
On this
there.
grind for a
Boom.
long time.